Hey, what's going on, guys? Corey Smith here, CoreFX, through T3 Live, bringing you guys another pre-week market analysis. It is now Saturday, October 28th. This is for the week ahead, starting on Sunday, October 29th here in the Forex markets. What we do in these videos is I'll cover what happened last week, strongest, weakest performing currencies, what happened in the news events, as well as the technical charts, what happened. And then we'll go ahead and take a look forward in the week ahead, see what news events are worth watching, worth either trading around or staying out of the markets for. Get a little bit of a bias on what my opinion is and what some economists are thinking with certain issues going on around the world. And then we'll jump into some currency pair analysis, see what the major pairs are doing, and what the technical analysis are showing us. And we'll cover what's going on here in the week ahead. I'm going to go ahead and jump into it here, guys. Starting with last week's performance, you can see here this is the relative performance versus the US dollar, but it's going to show the overall relative performance of each of the pairs of these 7 that we follow here, including the dollar, making it 8. But we've got the dollar as the strongest performer on the week, as you can see here. All the way left is going to be the strongest. All the way right is going to be the weakest. We had the dollar, yen, and pound as the top 3 performers on the week. And then the bottom 3 performers were going to be the Aussie, CAD, and Euro. But as you can see, there was from New Zealand, Swiss franc, Euro, CAD, and Aussie, there was over a 1% downside move on the week. So pretty significant bearish moves out of a lot of the currencies here this week. This has been a pretty good month here, October, as we come to an end this next month. We start the first week of November, and it really has been a pretty good trading month, especially the past couple weeks. We've had some good volatility as far as the Forex markets go, and there's been some really good trading opportunities. This past week was an awesome week, and we'll go ahead and cover some of that here. But I'll just jump into these charts here for each of these pairs to show you what's going on technically. The US dollar we saw was underneath this blue weekly resistance here last week, and I've been telling you guys for a few weeks now about this inverse head and shoulders pattern we had forming, with this trend reversal looking like it was starting to take place with the dollar. And this week that exactly played out, as you can see here. The dollar blew out on Thursday and then continued higher Friday, pulling off the highs a little bit. But all in all, the dollar broke out of this inverse head and shoulders perfectly, as we had expected. Friday did close with that shooting star, and it is a little bit overbought right now, so we could see a little bit of a correction, retest possibly down here on this neckline at around the 94 area. But all in all, I'm seeing this continuing higher for the dollar for the near term, as this trend reversals now got the moving averages flipped over, 20 above the 50. Price is trading above both of them, and we're now moving back higher, making a series of higher highs, higher lows, new higher high here. So we're going to continue to follow this. I'm expecting some bearish dollar at the beginning of the week, but overall, dollar strength is what I'm going to be looking to play in the weeks ahead. Taking us into the euro, basically the exact inverse, as the euro dollar is basically 60% of the transactions in Forex. They're going to be looking pretty much the same on these charts here. You can see here's the left shoulder that formed. We had a right shoulder head, and then we had a right shoulder here. And you can see last Thursday we also broke this neckline. Significant move lower, gap down, pushed lower again, hit this support, closed with a doji here on Friday. So a little bit of indecision. I'm expecting this to bounce a little bit up here. Maybe again come up and retest this 113 area on the neckline. Support turn resistance now, but we see the moving averages have crossed and rolled over, and we're now reversing this trend as well to the downside. Taking us over to the yen. As we saw last week, we came up and retested this resistance in a now downtrend as we came out of this choppy, messy chart. Rolled over down to around right above the 84 level, and now have just moved sideways all week, forming basically a low and tight base on top of this support. So we could see the yen break lower and continue down to this 83.50 weekly support down here. But all in all, still bearish with the yen, below the moving averages, 20 below the 50, sloping downwards, setting a series of lower low, lower high, lower low. Could come up, make a lower high, rally a little bit more this week before rolling over. But all in all, looking bearish for the yen. One thing to watch with this currency is it is a safe haven currency, and it's been getting crushed lately because stock markets have been booming. Risk on has been in the markets big time. If we see a reverse in that and we see a correction to the equities and we see the S&P and such rollover and this correction that we so seemingly need looking from a technical perspective, there could be some strong strength coming to the yen. The yen usually is the quickest acting and strongest acting safe haven pair. So keep an eye on that. If we see the stocks selling off, um, I'll be looking for a strong yen coming. But that's why, as of right now, I'm not really trading much of the yen. I'm not really too much of a bias for the yen, as fundamentally, I'm not really too sure how long this downtrend is going to continue. Taking us to the pound, um, uh, pretty sloppy chart here. We have the 20 sloping down now, about to hit the 50, but the 50 is still pointing upwards. Um, we're not really showing any clear price action. We're kind of range bound here in this zone, so I'm not really looking to do anything with the pound until we get a breakout of either this level up top here or this level down here, this trend line support. We have a huge week coming up for the pound, though, so I'm expecting this week for sure will give us a better direction of where this pair is going. Canadian dollar continues to sell off, as I showed you guys here. Back-to-back rate hikes. We had a strong CAD all the way up, topped out in September. Some negative data came out, and we started rolling over. No rate hike again. Continued to roll over. Moved sideways and based here on the support. And again, this week we crashed lower, even breaking this weekly support. Hit off this 76.50 here and rallied a little bit, but all in all, bearish CAD. We're pretty oversold right now as the moving averages are all the way up here, but the 20 now crossed under the 50, which the 50 has also now began to slope downward, and price has now begun to rotate to the downside pretty nicely. So I'll be looking for shorts with the CAD as well. Swiss franc, same story. Pretty much most of these pairs we're going to be looking at from here on out is going to be telling us the same story. We've got a lower low, lower high, huge lower low being set now, but it's bouncing off this 94.50 support. I could definitely see us rallying up to maybe the 95.50 region here, getting, a little bit more reversion to the mean, let these moving averages catch up, pull back, do a little correction here, and then roll over as more sellers step in. Australian dollar, same story. We saw it come down here last week, came back up. We set this lower low, this lower high. I said we could see another lower low made this week. It's exactly what it did. Blew out of this 77.50 weekly support here, came down to touch the 76.50 support here, and has now bounced a little bit. Again, could see a little bit of a rally bounce up here before continuing lower, but these pairs could also just keep on falling lower or totally blow back up higher and keep shooting upwards. We gotta wait and see what the price tells us to. Just always be planned and have a action plan of what to do in the bias somewhat on what you're gonna do if what happens. New Zealand dollar again sold off. We saw it come back up here, retest this 72. I told you guys we could at least come to retest this low, potentially set a new lower low. What has it done? Blown out every level of support all the way down to this support level over here at around 98.50. And we have not had much of a rally at all through this downtrend. So again, another little bit oversold looking chart that we could see a little bit of a rally before continuing lower. But pretty much all in all, bearish on a decent amount of these crosses here. Very bullish on the U.S. dollar, but we'll have to wait and see what the markets show us this week and where we'll be acting. Taking us to last week's news events. So last week we started with Sunday. Not too much going on. As we said, Sunday and Monday, really, there wasn't going to be too much in terms of news. Shinzo Abe did hold an election and won the election, still holds majority. Abenomics to continue, nothing to worry about with that. The yen's been pretty sturdy, nothing crazy going on there. On Monday, risk on continued. All three major averages opened up at all-time highs and moved higher. Theresa May told the European Union summit that important progress was made in Brexit last week in Brussels, so there was some good news to start the week with Brexit. And Catalonian tensions escalated in Spain. Last week I covered what this was. If you're behind, don't know what it is, haven't been following, check out last week so you can see what's going on. And then we moved into Tuesday. Early AM Tuesday, we had PMI numbers all across Europe, and they, for the most part, beat expectations. This was good signs out of Europe. France and Germany, two of the biggest economies over there, beat the PMI Purchasing Managers Index expectations, basically a survey of top purchasing managers and companies to get their outlook on business, the business environment, and how they see things looking for business over there. And as you can see, if it's over 50, it's a good sign, and they're well over 50, and they're beating expectations. So Eurozone continues to prosper, and we're seeing that with these numbers here. Another thing that happened Tuesday night that wasn't really planned event. It was kind of an unknown event that came up on us. This was led to a huge sell-off in New Zealand. I actually was in a New Zealand dollar short, so it was a beautiful trade that I kind of got lucky with the news event, but the technicals lined up for it. So there was a new prime minister voted in that took majority in New Zealand. Jacinda Ardern, she in a speech on Tuesday declared their government is gonna map a new course for New Zealand, and they'll be focusing on pretty much everybody in New Zealand, no matter where they line up, no matter where they live, what they do, anything like that. And essentially, this caused some weakness from New Zealand. So the new Prime Minister Jacinda Ardern, she wasn't. They weren't expecting her to win. They were expecting Bill English to continue his party leading, and since she won the week prior, her government came in and took over, and basically she had a speech Tuesday night that New Zealand tank I was talking about was actually the week before. I apologize for that. That was when the actual election was announced. This was the further weakness in New Zealand did continue, but basically she just came out and said she's remapping almost everything that they're going to plan on doing with the government over there, and anything that's uncertain spooks investors. Anything that's unclear for the future and isn't particularly forecastable is going to make people scared. And we saw a lot of money leaving New Zealand, a lot of money getting out of the New Zealand dollar as investments left the country on this new government takeover and her announcing these new plans. So basically, it's further weakness is pretty much continued to be expected out of New Zealand as an event like this just brings uncertainty, and with a big political change in ruling like this could continue to see a weaker New Zealand dollar throughout the rest of the year. So we'll be watching for a weak New Zealand. We'll see how the technicals line up and what's going on. But this is keeping me looking for shorts with New Zealand. We had the Australian dollar CPI. This is the headline of Forex right now. Really, all central banks. Inflation is the talk of the town. It's been lagging around the world as the economies have been picking up. Employment's been better. As we could see, the stock markets have all been rallying, and really numbers across the board, other than wage growth as well, have been all picking up. But inflation doesn't seem to be, and you can see here out of Australia, again, a big miss. We had expectations of 0.8% quarterly inflation numbers. This is the consumer price index, inflation from the consumer point of view, and it missed expectations, so it's actually weakening. The Aussie dropped about 50 to 70 pips off this number, and this really continues to support the Reserve Bank of Australia, their central bank over their statements that the Australian economy is behind the rest of the world in the recovery and far from hiking rates. So the Australian dollars continue to tank from that, and these CPI numbers are really, really something that we're going to want to continue to watch out of every country right now in the FX markets. Bringing us into Wednesday, out of the pound, we had GDP. They had 0.3% expectations. The actual came out at 0.4%, so it beat expectations. And the pound gained some strength overnight, moving about 100 plus pips across the board all through the night. So this was a great move, great signs out of the UK as Brexit is looming and people are worried about their growth in their economy and all. They're still continuing to grow and show us good data. U.S. durable goods posted a 0.7% actual gain, but 0.5% was the expectations, and this was a great gain. Really showed that there was a broad gain across the board, making the annualized increase in goods sold from July to September the highest it's been in 3 years. Basically just meaning that there's strong investment happening in the economy and at the close of the third quarter, and really is just a great sign of economic strength to continue as people and companies are investing more and more. This took us into the Bank of Canada, who kept rates unchanged as expected. They hiked rates twice in a row this year, and the data since then has not supported these rate hikes. The statement from the Bank of Canada was really bearish as they pressed substantial uncertainty with NAFTA negotiations. They said they'll need to be cautious moving forward, indicating that they'll be waiting for any future rate hikes until data starts to improve. After this, we saw a significant sell-off in the CAD as rate hikes in December and in the near future pretty much got taken off the table. We'll see how some numbers come out this week ahead and all, but it's kind of expected now that the CAD's going to hold off on hiking rates as they wait to see some more data supporting this. And on Wednesday, U.S. equities closed lower. It actually was the worst day they had in 7 weeks after mixed earning reports. Um, there was also setbacks out of the U.S. with the tax reform and drama escalated in D.C. But if you look at the S&P chart, still even on the down days, I'll cover this real quick. Even on the down days, you can see the wick down here touching this 20 SMA. Even when price shot all the way down here on Wednesday, you still saw buyers immediately step in, and before even the end of the day, had pushed price all the way back, recovering so much of that loss. So even with a bearish day like that and mixed earnings reports and fundamentals finally starting to show a little bit of weakness, there's still buyers stepping into the market every time it gets dragged lower. So nothing still really to worry about. And then we had also on Wednesday the Bank of Canada press conference afterwards, and then New Zealand trade balance not too significant, but they did miss pretty good amount difference between imports and exports, so they were net negative with much more importing going on than exporting. And then Spain's unemployment rate went down a little bit here. Not really anything we covered too much, but with the tensions picking up over there, any good signs out of the economy kind of helps calm that down and that frenzy. Thursday we had equities of the U.S. open higher and then pulled back and closed pretty much flat on the day. But out of Europe we had the ECB conference. This is their press conference, as I covered last week, after their minimum bid rate. This is going to be basically the FOMC statement out of the U.S., their central bank meeting around their interest rates. The rates held steady. Initially, the euro moved to the downside, about a half a percentage, 70 pips lower, and euro really just continued to sell off afterwards. The Draghi announced that the bond purchasing, the quantitative easing out of Europe that they've been doing at about $60 billion a month, they're going to be cutting down to $30 billion a month. So everyone was kind of thinking that this quantitative easing that they've been doing with this bond purchasing and asset purchasing, that they were going to, since the economy is doing so well, we have been hearing they've been talking about they were going to taper it and start cutting back on it. And basically, since they announced that not only are they going to be continuing it at $30 billion per month, but they extended how long they'll be doing it through at least September of 2018. That's a pretty long extension, and he said at that point they can still continue onwards, and they're not going to just end September 18th. September 2018, they're going to negotiate how to continue forward with it, and they're going to cut back to $30 billion a month on January 1st of this year. But this is all subject to change, as really the council seems fit. So the market saw this as bearish reaction to the euro, as they're really gradually cutting back on this QE program that they've been doing. But yeah, the QE is remaining open through the end of 2018 shows that the European Central Bank really won't be looking to hike rates for the near future. As this is going on, they're not going to be hiking rates while the QE is going on at this extent. So really it's just seen as bearish for the euro all across the board as the euro sold off that we saw. So I'm expecting some continued weakness really out of the Eurozone with the currency. But all in all, their numbers are strong and their economy's doing good. They just have some other stuff to worry about before they can start hiking rates again. It was a yellow event, so it's not really typically something I cover. But PPI is going to be the producer price index, another inflation number, but from the manufacturing producers of goods side of things. Their quarterly report of that missed expectations as well. Not too much of a market reaction, but it just shows us even more of a bearish outlook on the Australian dollar and their inflation status. The CPI numbers both missing pretty significantly this week. So this is really something that we want to keep an eye on for trading events. And essentially, the Australian economies really, really are as far behind the rest of the world as the Reserve Bank has been telling us. Moving on to Friday of last week. We had Thursday night, after the markets closed, actually, we had earnings reports from a lot of tech giants like Amazon and Alphabet, the parent company of Google. And there was real good earnings from Alphabet and Amazon, which led a charge on Friday, but I'll cover that in a minute. Friday, Catalonia in Spain, things kind of picked up. The Prime Minister of Spain called on the Senate to vote to approve his removal of the Catalonian president Puigdemont and his VP and all their other ministers and all their government, and take over control of the region and their police force and everything. Puigdemont wants snap elections to just re-elect the officials there, but Spain wants to just take them all out of office and re-vote in all new people. And basically, the Catalonian president, Puigdemont, um, had a vote with their Senate, and they passed an unprecedented vote to implement their independence. So we've got Spain on one hand, their Senate passing that it's illegal, that they can't secede from Spain and vote their independence in. And then you have Catalonia passing with their own Senate saying that it is legal and that they are going to secede from Spain. So right now we're at a gridlock. They're trying to figure out what to do. Catalonians are threatening to surround all the government buildings, the civilians, and make human shields to block Spain from coming in and taking over. The Spanish government's saying that this is all ridiculous and illegal and it's not happening, and they're pretty much at a standstill right now. And until we figure out what's going on with this, not too much to worry about. But if I don't think it will. But if this turns into some kind of a physical altercation, it could really, really stir the pot up over there in Europe, as far as the FX markets and all go. But also the Fed chair option, Taylor, the Stanford economist we've talked about last week, they're saying if he got chosen, he'd call for a major reform of the Fed, which one of the things I noted that he said he would do would be less micromanagement over the banks. So this is something, if we see him get picked, that could be very, very, very hawkish and really see the dollar charge higher. But as of right now, that's not looking like he's going to be the favorite. But we'll have to wait and see. And the U.S. stocks on Friday closed higher across all three averages, with the Nasdaq being the biggest gainer, 2.2% higher off those beat tech earnings that I told you about that we saw out of some of those tech giants there Thursday evening. So risk on continues out of the U.S. as stocks are continuing to move into record highs. We had a little bit of a choppy week, as you see in the S&P here. We did have an up and down week, but all in all ended on the week higher once again. So we're still in a risk on environment out of the U.S. This moves us forward to this week ahead. Starting with Sunday, again, I filter these yellow events just to check and see if there's anything worth going over. And this isn't a big event, but I'll just cover it just because it's something. We have the retail sales number out of Japan. It's their year-over-year report. Just shows, the consumer spending and how the retail sales are doing. Something to watch for the yen. Typically, no trading events around it because it doesn't get much of a move, especially on Sunday nights, where I highly recommend you don't trade. But just something to keep an eye on if you want to keep an eye on the Japanese economy, see how they're doing. This takes us into Monday. Monday we have some, little middle of the road reports. Nothing of this is really worth following for us. Yeah, it's good to keep an eye on because you can gauge the trends of economies and how they're doing. Some Spanish numbers coming out here and things, but really nothing that's going to drastically affect the FX markets that we're going to have to worry about trading. We have the manufacturing PMI numbers. These are the PMI numbers reported from the Chinese economy. These exact numbers, the manufacturing PMI numbers, are actually going to come out on Tuesday night. Right here, this is the Kaisen manufacturers PMI. This is a third party doing it. This is going to be the more accurate one. This is the one we follow. So this is an important announcement, but this Monday night one's not really too important. And then Monday into Tuesday, we have the Bank of Japan monetary policy report. They have their FOMC meeting pretty much out of the U.S. This is their central bank meeting. They meet 8 times a year as well as the U.S. Their interest rate's at negative 0.1%. So they've been a very Abenomics out of Shinzo Abe has been really nothing we've ever seen before, but he's done a good job with their economy over there. Last time they met in September, it was really uneventful, as the Bank of Japan typically has been of late. Prime Minister Shinzo Abe, as I said, had the election recently and won to remain the ruling majority, confirming the continuation of his Abenomics and keeping his really loose monetary policy and massive asset purchasing quantitative easing program like we've seen out of the U.S., Europe, and other places. This meeting could be a little more eventful as they will issue their quarterly outlook. The outlook report here, but again, these events typically out of Japan aren't the biggest. These are the biggest trading events, central bank meetings out of other currencies that we can look for, but out of Japan, it's typically not the craziest. They've just been on a steady course, nothing drastic, haven't really changed too much, but we'll see how this outlook gives what Shinzo and them are thinking of the inflation numbers and all moving forward, and maybe we can get a little bit of a different direction or outlook here out of the Bank of Japan and maybe get some moves off of it. Taking us into later on Tuesday, um, out of Europe, we have the CPI year over year flash numbers. And this is going to be the first of two CPI reports out of Europe, and it's typically the more volatile one as it's the first one. And although this is a medium news event and not typically followed, I told you guys CPI right now is the highlight. And anything with CPI out of economies we want to be watching. So this European CPI year over year, we do want to watch. Their goal is 1.5%. We'll see if they hit it, beat it, meet it, whatever. And see how they react to it. But this could be definitely something to look for a trade event around the euro on. And then we have, following that, the Canadian dollar's GDP month over month. And this will definitely be watched closely, as last month they missed expectations. Like I said, following two rate hikes, they missed expectations on their GDP numbers. Another miss could look pretty ugly for the CAD. But that being said, we also could beat it here and see a little bit of a pick up in these numbers again out of Canada. So we'll have to just wait and see. Then we have the U.S. dollars consumer confidence monthly report. This report's a household survey to determine how confident or not confident the American consumer feels about the economy. It's really just a leading indicator of consumer spending, which is a big driver force of the economy, but just to get a gauge of how people feel about the economy. And this has been pretty strong numbers lately out of the U.S., but we'll have to wait and see what these give us. Bank of Canada Governor Polo speaks before the House of Commons. Always watch central bank heads of central banks speaking, because it can always cause strong moves, especially Bank of Canada's in the spotlight. So definitely something worth watching. New Zealand dollar, their employment change, their unemployment rate. This is basically the NFP out of New Zealand, released every quarter, and it's released 35 days after the quarter ends to give an idea of how the quarter did as far as employment rate and jobs created. And you know the employment is one of the jobs of the central bank, so it's one of these numbers that we follow really closely in the FX markets, as there's always strong moves around these events. Whether it's a choppy move or all in one direction, you can always expect a significant amount of pips to be moved in this, and that's a good time to catch some money. And then we have like I said, the manufacturing PMI reading is going to be Tuesday night here out of China. This is the Purchasing Manufacturers Index, Purchasing Managers Index, sorry. It's a leading indicator of economic health. China is one of the world's largest economies, as we've covered. And basically, if this number is above 50, it shows an expansion in manufacturing. It's been above 50 pretty much every month straight, I think since July of 2016 or so. And the most recent meeting was one of the highest yet at 52.4. So again, could continue the risk-on environment. Or if it's a miss, we could see some start to worry about just a little bit of an idea of how they're feeling over there economically. We'll have to wait and see how that goes. Manufacturing PMI out of the pound. We have early AM on Wednesday. This is, again, the Purchasing Managers Index. This is for the manufacturing sector out of the UK to gauge their business conditions. Everything coming out of the UK is important right now with Brexit looming, and their central bank actually meets this week. So definitely a tradable event and something worth watching. Then we have the manufacturing PMI out of the U.S., same numbers, but out of the U.S. Crude oil inventory levels that are taken every week. And then one of the biggest events of the week right here, U.S. FOMC meets with 3 central bank meetings this week, so it's a hugely stacked up week. But U.S. FOMC should be pretty decent. Yellen's still the head, and she holds it through February of 2018, so another few more months. She could hold it further if she's picked to run a second term, but it's not looking too likely right now. The Fed's not looking like it's likely. The chances are like 30 or something percent of the Fed hiking rates this meeting, and they're most likely going to keep rates unchanged at 1.25%. But we do need to see what their outlook is for the near future, and if the December meeting rate hike is still as highly anticipated as it has been. Keep an eye on who Trump's going to be appointing this week as the next Fed chair, as this is the week we're supposed to be getting the answer. As of right now, reports have been released that the current federal governor, Jerome Powell, one of the governors in the Fed, Jerome Powell, he's the current front runner. It's not confirmed in any way, and you know Trump, he could choose totally somebody different last minute. But Powell would really continue the same monetary policy path we've been on with gradual rate hikes. This will give Trump, his imprint on the Fed, and he'll be able to get his person that he chose personally in there. And he also campaigned a lot against Janet Yellen and so it would also back some of his supporters with that as well. We have the Bank of Canada Governor Polo speaking as well after this. Um, Anytime central banker speaking, worth watching. Not a big deal. He's in front of the Senate committee this time, but just keep an eye on it. If you're in a CAD trade, definitely be aware that this is happening and check and see what's going on. The Australian dollar's trade balance, again, the difference between imports and exports. This is typically positive out of the Australian dollar, which means that they export a lot more than they import, and this is a good sign. It's a good, strong economy. But if we see this number weakening, it could start to worry us. However, the Australian dollar weakening could help this, as the foreign economies buying from them have more buying power against a weaker Australian dollar. This number really shows us the demand for the Australian dollar's goods and their currency. So this is something we really want to watch in FX, as if there's a high demand, this is going to show us that the price is going to go up for the Australian dollar. So another event just to keep an eye on. Then we get a construction PMI. This is going to be the same PMI number, but out of the construction industry, out of GBP. The UK, something to watch as well. We want this reading to show over 50 to show expansion, but it came in 48 last month and has missed for 3 straight. So this is not a good sign out of the construction side, and that's a big, big, big part of an economy. So hopefully we get a better number here. And then following after that is one of the other biggest events of the week. This is the Bank of England's inflation report, their monetary policy, and their interest rate vote, which they hold monthly. Excuse me. Bank of England, like I said, they meet and vote on their interest rates monthly and issue a monetary policy statement, which covers their view of the economy and what they think and everything going on. And this inflation report's released quarterly as well that they release. This shows the Bank of England's view on the economic conditions and how it relates to inflation. And really going into this meeting, economists are forecasting there's a high chance of Bank of England voting for a rate hike this meeting. There's actually over 70% chance people are thinking. However, and their rates right now are at a quarter percentage. They slashed rates after Brexit happened. So there's a high expectation that they could increase rates this meeting. But a lot of these same economists that are predicting this also believe that it would be a bad decision to hike right now, as Brexit's still unclear. The economic conditions are a little bit, they're showing good signs, but they're also showing a little bit of weak signs in some areas, like in inflation and wage growth and all. So this really should be a real volatile trading event for the pound. Definitely expecting the pound to be the biggest moving pair of the week. Whether it's up or down, can't say, but I'm expecting it to be the biggest mover of the week. So around this event, I might just stay away from the pound altogether, as it could be very, very volatile. We'll have to wait and see. Carney speaks afterwards, the governor of the Bank of England. Holds a press conference to go over it. So we'll see what the inflation looks like and what these numbers come out, what they vote on this interest rate. Following that, we have the Australian dollar's retail sales monthly report. Again, this just shows consumer spending, and it's a good trading event. Followed by the services PMI out of China right after. China and Australia's economies are really interlinked, so the Chinese data will affect the Australian dollar. So if you trade around the retail sales event, it could be a nice time to try to get a double trade and try getting the follow through from this event to continue maybe in this Chinese data release. Good thing to watch, like these double news event lineups. We have a massive double event lineup here on Friday, but not getting rushed into that. We have the pound has their services PMI. Again, a third PMI reading out of the pound this week. Same PMI numbers, just out of the services sector this time. They've been getting strong readings from this sector. It's really been above 53 for months now, so we'll hope this number continues higher as far as a strong pound is concerned, and see what these numbers look like for us. Takes us into a huge Friday. It's the first Friday in November. We know that means NFP. Get our employment report out of the U.S. every first Friday of the month. This is a quick first Friday. It's November 3rd. And we have the Canadian dollar has their unemployment report and trade balance at the same time. This happens pretty often. And when it does, I call this a double whammy. And there's an opportunity to catch a trade. Very risky, and you have to know what you're doing, definitely. But you could catch a really huge trade if you trade the dollar CAD around this and you happen to catch the right direction. As with anything in trading, you got to have protective stops in place, and the reward has to be worth the risk and all. But with these two reports, we're expecting to see a lot of volatility, especially for a Friday. These cause some crazy movements. NFP is one of the biggest moving events out of the U.S., so this caused some pretty crazy moves. Out of Canada, the unemployment rate and trade balance, basically unemployment's a monthly reading. Both missed last month. Unemployment percentage was lower, but was better. But they both missed their employment numbers and trade balance last month, and the CAD saw a slight sell-off because of it. So I'll have to wait and see what this one brings us. And then the NFP out of the U.S. is really volatile, as I said, and it's really last month missed expectations pretty bad. But that was really the hurricane data messed things up, and we did see a stronger dollar temporarily afterwards, even with a missed number. So now we got some more normalized numbers in. We'll have to wait and see what we get here out of the U.S. with these numbers, out of Canada with these numbers, and we'll try to see if we can catch a trading event around it. But that pretty much covers the technical fundamental for the pairs and the news for this week. Tune into the next video and I'll go over some technical analysis for the major crosses and some other setups that I like this week. Just some ideas for you if you like the technical analysis side of things. But this should cover everything to watch for, guys. Thank you again. I really appreciate tuning in. Like and subscribe if you like what you're seeing here with T3's page. They got some great content they released. Throw a comment down here if you have recommendations for the next video, something you do like, you don't like, or any kind of feedback is much appreciated. And again, guys, I really appreciate taking the time to watch these videos. Thank you very much, and I'll catch you next time.